Ladies and gentlemen, thank you so much for being here. As always, today we have a familiar guest. We've got Brian from Santiment here to talk to you about Bitcoin. Specifically, we're going to be doing some Bitcoin analysis today, trying to see and make sense of what might happen here in the markets in the short term, given all the things that are going on in the world around us. So, Brian, thanks for being here again, man.
Thank you so much. Always a pleasure. And obviously, prices have retraced just a little bit over the past 24 hours. I see that Bitcoin's down about 6%, and
Mm-hmm.
altcoins have been hammered a little bit more. So we've got a little bit to cover here to figure out whether the last couple of weeks were just a big mirage or whether they actually were legitimately backed by some bullish on-chain and social indicators.
That sounds great to me. Let's take a dive into the data and see what it says.
Perfecto. Yeah. So we can just breeze through a few of the major on-chain metrics that we typically look for at Santiment. Obviously, circulation would be one of them, the amount of unique Bitcoin moving on the network on a given day. Not really much
Mm-hmm.
to say other than, when things were really bouncing here on March 31st, circulation actually dropped a tiny bit. So that was a sign that this may not have the same legs as perhaps the March 28th one, where we actually got above 48K at one point. Circulation
Mm-hmm.
isn't really showing much. Daily active addresses more or less flat right now too. These are our two main utility indicators, and they're basically not
Mm-hmm.
showing much in either direction, so they can be considered neutral right now. MVRV is
Okay.
an interesting one. What this is showing is essentially the average returns of traders who have entered the markets within the last 30 days. When things are high, that is when corrections are more likely to occur. When things are low, that's increasing the likeliness of a price bounce. Typically, we look for around, it's going to be off the charts here actually, but typically, I mean, we got as high as 12%. Uh, Plus 15% is around the major danger zone, which it didn't actually get
Mm-hmm.
to before correcting here, and negative 15% on the other end for almost certain bounces coming up. Right now,
Mm-hmm.
we're sitting at just below 0%, which means there's a slight opportunity to get in for lower risk than usual, but it's very, very slight.
Right. Got it. And when it drops down, just for folks that might have watched other shows, you kind of look at it in that delta plus or minus 15, right? To see where you might be running out of gas in terms of lots of profits being made, and then on the bottom end, people sort of on the lowest possible end of the spectrum looking at a bounce from those low levels.
Yeah, that's exactly right. I mean, crypto's a zero-sum game just like any other sector, even though it may not feel
Mm-hmm.
like it sometimes. And with that, you don't want to be entering into an asset when everyone else has already significantly profited on that asset, at least on the midterm time scale, like we're looking at for 30-day. Um, you
Right.
typically want to wait for there to at least be a little bit of pain or things to neutralize out, like they have for the first time really since March 15th. So we're looking at about a 3 week best opportunity here, relatively speaking.
Got it. Very interesting.
Yeah, so moving on, weighted sentiment is interesting. This is measuring the amount of discussion related to Bitcoin multiplied by the positive versus negative ratio. Uh, just like the MVRV, the higher we go, the more likely there's a lot of greed and euphoria going on, and we can clearly see what happens when there's a lot of very positive sentiment versus
Mm-hmm.
a lot of negative sentiment, like we saw in this stretch back from June to July of 2021. Right now, we're actually at a historically negative ratio right now, which is very interesting. We're going to see how this week
Yeah.
ends, but this is clearly a sign that people are not very positive and didn't even really believe in this bull run the last couple of weeks. Really, we've had 3 straight weeks now of overwhelming negativity. So that's something to factor in as a good thing for Bitcoin because there's a lot of FUD happening right now, fear, uncertainty, doubt, that can absolutely propel the markets.
Yeah, and that's surprising to me because I think if you look at a lot of, like, if you're on social media, right, you're on Twitter, I think at a lot of times you'll see an amplification of the positive sentiment, right?
Right.
The maybe the 5% of tweets and posts that are we've got a bull runner on the horizon, 100K Bitcoin, all the hype, right? Because it's retweetable, everyone likes it. You're trying to manifest that.
Right.
But if you actually look at this data, it's not the same.
Exactly. I'm seeing the same thing as you, Hashoshi. It's a lot of positive comments out there. However, the big asterisk is they aren't so much related to Bitcoin right now, because Bitcoin's been kind of the boring uncle, while all of the stepchildren, I don't know how I came up with that metaphor. I don't think it's a very good one. But regardless, the altcoins are the ones who've really been enjoying the party over the last couple of weeks. So a lot of euphoria has been related to either legitimate or not so legitimate altcoins because of their pretty impressive percentage gains that they saw from really the beginning of March all the way up until these last couple of days when things started to correct.
Now, I want to thank the sponsor of today's episode of Bitcoin Analysis, iTrustCapital. Now, if you're in the United States and you want to open up a cryptocurrency individual retirement account, or IRA, you can do so using the link in the description and the pinned comment below. This will allow you to trade cryptocurrency in a tax-advantaged manner, and you can get a $100 Bitcoin bonus for signing up and funding an account. So all those links are in the description below. Thanks to iTrustCapital for sponsoring the show.
So because that sentiment is so driven toward, the positivity is driven toward altcoins rather than Bitcoin, kind of the king of the castle that's allowing all of these altcoins to be able to thrive was starting to be ignored. And with that, people were calling it kind of not that amazing of an investment. Bitcoin is dead, starting to come up with flippening suggestions once again for Ethereum. Even Luna, is one that I'm constantly seeing now is a project challenging Bitcoin, which is all great. But until the trading pairs aren't, 80% plus related to Bitcoin, obviously stable coins are existent as well. But Bitcoin is going to be pegged to many of these altcoin trades. Whenever an altcoin is traded, it's either for a stable coin or Bitcoin in most cases. Therefore, Bitcoin has to be considered important and vital for crypto to succeed until that scenario changes one day.
Yeah, and that's why a lot of the market follows Bitcoin, and there's a lot of interest and analysis on Bitcoin, even for people that don't really invest heavily in it, because they want to know where things are going to go because of the trading pairs, because of the infrastructure, because of the well-established nature of BTC in the markets.
Yeah, that's exactly right. So it's very interesting here. We ideally want to start seeing this sentiment neutralize a little bit. But, while things are so heavily away from Bitcoin, it usually means that there's going to be a retracement. And then if there's FUD related to the actual price dropping, like we were seeing here or here, that's when we see the big bounces here as well. So interesting.
So keep a close eye on that one.
Absolutely. It's important to know exactly how the crowd is perceiving Bitcoin versus the altcoins at any given moment. Supply and exchanges, not much to say other than things have flattened out a little bit. It does look like right around 10% of the supply of Bitcoin on exchanges is where the crowd is content on things staying right now after a significant drop for most of the last year and even beyond the last year. But overall, this is a good macro sign that once things really steady out and appear to be more bullish for Bitcoin, the lack of Bitcoin on exchanges implies less risk of further massive sell-offs. That's the theory, and we've seen enough evidence to really back this as a good macro leading indicator for the community to use. Yeah, let's look at whales really quickly here. So I'm going to show you what the percentage of supply looks like for traders holding between 100 to 10,000 Bitcoin in their wallet. So we see a pretty obvious pattern of whales beginning to sell off right around late October of 2021. They were holding about 49.5% of the supply. Now they're down to about 48% of the supply. 1.5% of the supply may not sound like a ton, but it's a ton when it comes to all of Bitcoin. That's tens of billions of dollars, if I'm not mistaken. So until this pattern changes, we have to be a bit weary of Bitcoin's stability for another run that looks a little like this, when there was an actual accumulation pattern going on. And
Right.
it's just something we have to be very mindful of and be um, watching closely until these key stakeholders who really do control the direction of Bitcoin's price, until they start accumulating again. Um, at minimum, things are going to be pretty volatile for a while. So we're watching this one closely and continuing to update the community.
Yeah, I mean, it looks like it's from, I guess, the October November timeframe. You see a pretty steady downtrend in whale holdings, and if you look at what drove up to all-time highs in the first place is the accumulation from whales,
Yeah,
from
exactly.
big holders.
I can even back it out to the last couple of years for some context, and look at how it looked from you know post Black Thursday. This was about a month after the
Hmm.
COVID news broke, and they were holding 45.8% of the supply then, and got it all the way up to 49.5. So almost 4% accumulated of the supply during that time, and that had a lot to do
Yeah,
with these parabolic rises.
for sure. So you'd be looking at a reversal trend there for whales, obviously buying and then subsequently holding Bitcoin. And also, I think this gives credence to some of what I've been I've been seeing out there. In a handful of people I've seen have written their opinion out there and said, a lot of the market is propped on some institutional buying, but a lot of it is like retail FOMO, people that are holding, keeping supply on exchanges low. But you really need to get back to where we were. You need those accumulation from whales. 1-2% of the supply makes a huge difference in terms of whale
Oh yeah,
holdings.
especially for Bitcoin more than anything else. But yeah, we see the
Hmm.
same pattern for altcoins. If the largest holders in the space are lessening their grip on the supply, it implies that there is a little bit of bag selling, especially if they're selling at the tops here. This is them profit taking and giving their bags to the smaller traders who are hoping that
Hmm.
prices go from 60K to 100K, and they just keep on, the trajectory keeps on increasing. And in most cases, people with the most at stake know what they're doing, and they're dumping near the tops and accumulating near the bottoms. So we always have to be wary. Now, keep in mind, I mean, we're still at 48% of the supply, which is higher than it was in late 2020. So before
Hmm.
then, they were holding way less than they still do now. So it's all relative, but at least for midterm traders, swing traders, uh, this looks like they're at least expecting the prices to come down, and maybe they already have. But in a vacuum, this would be a more bearish sign than a bullish one.
Very interesting. Yep.
All right, and just a couple more minutes. I wanted to make sure to show off a new metric that I really love. Um, so let's yeah, actually, this is fine. What this is showing, it's a little zoomed out. Let me go to the last 6 months. What this is showing is the ratio of on-chain transaction volume that is in profit versus in a loss pattern. Um,
Hmm.
I've actually got a template that shows both Bitcoin and Ethereum at the same time, which is really cool right here. And let's full screen that. Okay, so this is a lot of colors, a lot
Wow.
of lights. To simplify it, I'll just make
Break it
this a
down.
line. Yeah. So this green line is the price of Bitcoin. The blue bars is the high ratio of Bitcoin, and yellow bars is the high ratio of Ethereum in terms of how many transactions are happening while in profit, if it's positive, or at a loss while in negative. Typically, when
Hmm.
traders are taking profit, especially on these huge spikes, that's when the tops tend to occur. We see a huge spike here with both Bitcoin and Ethereum. We see a huge spike here for just Ethereum. A lot of huge Ethereum spikes that have actually occurred. This was the largest Bitcoin spike in the last year, I believe. And look at that; it was pretty much right at the all-time high that occurred right around mid-November. So long story short, you want to avoid buying or holding too much of your bags when you see these massive transaction spikes while traders were in profit, and you want to actually
Hmm.
buy into an asset when you see some of these negative spikes occurring. It's a little more reliable on the top side. So this is a very, very solid
Right.
indicator that I'm still learning about that shows when profit taking is justified. But as we progress and learn more about this and release some models, we'll definitely keep, Hashoshi's community
Please
and the
do.
rest of the Santiment community posted on this.
Yeah, definitely. New indicators are always helpful, especially ones that help you make decisions in a way that's, there are a lot of lagging indicators in crypto
Yeah.
and just in markets in general. So something like this, I can say, hey, quick and dirty is now an okay time, a really good time, a really bad time to sell or to buy. Just another quick check that you can make. And Brian, I also wanted to ask you just your off the cuff opinion, right? Where do you think in the next week Bitcoin may go based on some of the data we looked at here, based on your intuition, knowing, of course, predictions, not a guarantee?
Yeah, of course. And obviously, I've always tried to give the asterisk that Santiment does not give investment advice. We simply make
Yeah.
educated guesses based on where divergences have gone historically, based on what they look like right
Hmm.
now. Uh, and that said, it does look like this correction has been justified when Bitcoin got up to 48K. The on-chain metrics looked a bit wobbly compared to
Hmm.
some of the bull runs in the past where they were more justified. I do think this correction could have a little more legs, but I also think it could chop at this level for a while. Um, it's probably not going to see an immediate bounce right back. I could eat my words,
Hmm.
uh, but I don't think there is um, enough positive on-chain and social metrics out there right now to
Yeah.
justify like an immediate, zoom up to 50K because people don't seem to be very bothered by this dip. We can see this was actually the largest mention of buy the dip in 3 weeks. And it was barely even
Hmm.
dipping at the time. And usually that's what happens when people proclaim it's time to buy the dip, it means it's not yet time to buy the dip. And when people say
Yeah.
Bitcoin is dead, that's when it's time to buy the dip.
Right. Yeah. So very interesting stuff. I mean, looking at this data gives you at least a better chance of making a good choice in terms of how you play. I would probably agree with you based on overall sentiment, some of the data we talked about. Just my general view of the market is that likely Bitcoin is going to move probably in a slightly negative slope for a little while, but kind of chopping in this range, the low 40Ks to mid 40Ks. And from
Yeah,
there, it's really going to depend on whales buying, institutions, retail, FOMO potentially, and then some of the negative indications, some of the macroeconomic conditions that we've been talking about over the last several weeks. It'll be all sort of weighing in the balance on those things from my perspective.
totally. And I've seen so many times where, like, an hour after one of our calls, either with you or one of our other relationships, we'll immediately see the on-chain metrics for an asset just flip on a dime, which is why our metrics
Yeah.
are so helpful. Especially funding rates, which we didn't get to on this call. Um, if we start seeing a bunch of people shorting because they're so confident that this trend of decline is going to continue, that's when things will turn around, right? Funding rate is where people put their money where their mouth is, and they are actually
Mm-hmm.
betting that the prices will continue to go down instead of just shout it from the rooftops on social media. Uh, so if you see that happening, we could easily see a quick turnaround and go right back to that 46 to 48K level. But I think it's going to be a lot of very short-term moves. Traders tend to get very um, precise, trying to make up some of their money, over precise, where they like buy any tiny dip and sell any tiny spike. And when they try to look at the price with a magnifying glass, it usually doesn't go in their favor.
Yep, I'm right there with you, Brian. So thanks so much for joining me today, as always, and for sharing some of the data. Folks, if you're watching and you have a prediction for where you think Bitcoin's going to go, or you have some questions about how to use Santiment, you can find links in the description below to go check out Santiment, check out some of the the material that they have there, and of course, sign up for a plan if you're interested, as you can see here on the screen. Thanks very much, Brian, and thanks to everyone who's watching.
Thank you. Code Hashoshi, 25% off your first month, guys. We're always here to help. Let us know if you have any questions. And thank you, Hashoshi, for the time.
Always. Until next time, folks, cheers.